So about 20 to 25% of our produced LNG for 2022 is exposed to those gas hub pricing indices. And so that includes both JKM, the Asian index, as well as TTF. Look, the geopolitical tensions obviously is something that is supporting prices. Europe started the winter with low inventories. That is supporting prices. There's a point where look, hopefully we don't see the security situation escalate, but I think Woodside is pretty well positioned to take advantage of gas price upside this coming year.
Meg, good morning. $100 a barrel oil, is that imminent in your opinion? And is it really justified by the fundamental supply and demand balance globally, or do you believe it's speculatively driven?
When we look at the fundamentals, what we see is that demand has recovered. So in 2020, when the COVID pandemic hit and the world was implementing lockdowns, obviously a significant amount of demand was destroyed. What we saw over the course of 2021 was demand recovery. What I think we're seeing right now is that demand continues to pick up. Supply has struggled a bit to keep up, and the past few years there has been underinvestment in the sector. We're seeing that OPEC Plus is struggling to meet their quotas, but then the geopolitical tension, of course, is adding to the price inflation that we're seeing today, and I think the uncertainty that we're seeing in Ukraine particularly is causing some of that price increase.
Meg, how is Woodside BHP Petroleum, the combined entity, positioning for net zero?
Yeah, it's a fantastic question. So Woodside just released our 2021 climate report, and I would encourage all of the viewers to take a look at that. In that report, we talk about our commitments to addressing climate change and how considerations around climate change influence our business strategy. We have set for ourselves targets to decarbonize our business and to reduce our net greenhouse gas emissions. Those targets are to reduce net greenhouse gas emissions in our equity business by 15% by 2025, 30% by 2030, on a pathway to net zero by 2050. Post-merger, we will apply those exact same goals. So as our portfolio grows, we do recognize our equity emissions are going to increase, but our commitment to decarbonize remains just as strong.
Meg, I want to talk a little bit about what a lot of investors are going to be looking at in terms of Woodside. That is, of course, the dividend paid out a considerable amount this time around, but there is a lot of capex coming through. Do you think that you can maintain around about 80% for investors moving forward, even with the significant amount of capex, like with the Scarborough that you do have lined up?
Yeah, it's a great question, and it's one that we know our shareholders are keenly interested in. So our dividend payout ratio, our dividend policy is to pay out a 50% ratio of net profit after tax, excluding underlying or excluding exceptional items. We've historically been paying closer to 80%. And on the backs of high prices and the very strong financial results we saw in 2021, we felt it was appropriate to return value to our shareholders at that historic level. Now, as we play forward and look at our balance sheet up ahead, post-merger, the BHP assets are coming to us with no debt. So that's going to drop our gearing by about half immediately. So we feel like we're very well positioned to manage the capital investment requirements, as well as to continue to be able to return value to our shareholders over the cycle. But we're going to look at a whole variety of ways to return value to shareholders. Dividends, of course, are valued, but we'll be taking a look at other things like specials and potentially even stock buybacks.